gentlemen, good day and welcome to the 20 Microns Limited Q2 and H1 FY2024 earnings conference call hosted by Vinstra Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand over the call to Tushar from Vinstra Securities Limited. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Vinstra Securities Limited, I welcome you all to 20 Microns Limited Q2 and H1 FY24 earnings conference call. The company is today represented by Mr. Atul Parekh, Chief Executive Officer and Managing Director. I would now like to hand over the call to Mr. Parekh for his opening remarks, post which we can start the question and answer session. Thank you and over to you, sir.
Good afternoon, ladies and gentlemen. A very warm welcome to the Q2 and H1 FY24 earnings conference call of 20 Microns Limited. I would like to begin by offering a brief overview of our company. 20 Microns Limited is a pioneering and a leading industrial mineral company with a rich experience spanning across 3 decades. We are the front runners in revolutionizing the micronization of various industrial minerals with a systematic approach in India. Our product range includes an array of non-metallic industrial minerals such as calcium carbonate, talc, kaolin, mica, quartz, dolomite, natural hydroxide, and various specialty chemicals and functional additives like mineral-based fertilizers, construction chemicals, and many more. With 9 state-of-the-art manufacturing facilities and warehouses across India, including Gujarat, Rajasthan, Tamil Nadu, and Andhra Pradesh, we have a collective manufacturing capacity of 450,000 metric tons per annum. Additionally, we operate 5 different mines in India, collectively holding a total mining reserve of approximately 169 lakh million tons. Our products are used as building blocks in various different industries like paints and coatings, rubber, plastics, paper, tires, ceramics, agrochemicals, printing inks, and many more. Currently, we serve a wide-ranging customer base across the world, including 65-plus international countries. We proudly cater to more than 200-plus clients, representing a wide array of industries, which also includes well-established companies like Berger Paints, Asian Paints, Acharya, Pidilite, L&T, Kansai Nerolac, Pinolex, ONG, CJK Tires, ExxonMobil, and many more. Now, moving on to the financials, our revenue from operations increased by 6.35% and stood at 199 crores in Q2 FY24 compared to 187.78 crores in Q2 FY23 on account of a surge in demand for our products in the underlying industries like paint, rubber, plastics, and others, led by extended festive demand and increase in propensity to consume. Further, our EBITDA increased by 28.25% from 233.5 million in Q2 FY23 to 299.4 million in Q2 FY24, and margins improved from 12.43% to 14.99% during the same period. This impressive performance can be attributed to our sustained commitment to cost efficiency, resulting in reduced power and fuel expenses and improved negotiations for freight charges during this period. The PAT increased by 34.24% and stood at 160.54 million rupees in Q2 FY24 compared to 119.6 million rupees in Q2 FY23. The margins improved to 8.04% from 6.37% during the same period. During H1 FY24, our exports contributed about 16% of our total sales. Now, coming on to our revenue split, the the paint industry contributed about 50% to the total revenue, followed by 23% by the plastics, and rest by the rubber, paper, ceramics, and many other allied industries. Further, our subsidiary 20 Micron Nano, which is engaged in the manufacturing of specialty chemicals and functional additives, has contributed 12% to the total revenue. One of the key drivers of our future success is our unwavering commitment to research and development. We invest heavily in fostering a culture of innovation, constantly pushing the boundaries of what is possible. Our dedicated team of 45 to 50 people continuously focus on innovation by developing a wide range of products in our in-house R&D facility in Vadodara, Gujarat. 20 Micron remains unwavering in its commitment to delivering high-quality products and innovative solutions. Through the ongoing research and development initiatives and close collaboration with both the domestic and international customers, we continue to enhance our product portfolio, catering to diverse markets. As one of India's leading producers of ultrafine industrial minerals and specialty chemicals, we are expanding our global footprint and diversifying our product mix. We added 61 products in our offerings during the financial year FY23. Further, I would also like to highlight some of our recent developments in terms of technology upgrade, where we have introduced automation across various different functions in business functions in our company, including tracking materials, the creation of purchase orders, weight recording in our ERP systems, vendor notifications for short receipts and material rejections, automated payment advice is given to our vendors. Additionally, we have also integrated ERP, CRM, and HRMS systems to efficiently gather data from key specific modules such as sales, production, finance, quality control, material management, sales tracking, executive performance, and employee activities, among other critical areas. In terms of our expansion, we have recently expanded into newer regions, including the Middle East, which includes Jordan, Egypt, Saudi Arabia, Iraq, and more, and Southeast Asia, which includes Thailand, Indonesia, Japan, South Korea, and Philippines, through various distribution agreements. Additionally, we have also restructured our distributor relationships in other international markets with a focus on capitalizing on their strengths and mitigating their weaknesses, all while optimizing the product portfolios to achieve maximum efficiency. Moving ahead, we are steadfast in our dedication to executing our strategy with precision, and we hold a strong belief in achieving greater profitability and enhanced cash flow for the fiscal year 2024. To realize this goal, we will persist in our efforts to improve the efficiency, including periodic upgrades to our machinery and technology. We also accelerate the adoption of digital capabilities and maximize the utilization of data, seizing the expanding growth opportunities within our core markets. Furthermore, we are confident that our strategic focus on operational excellence will be instrumental in significantly elevating the company's growth, profitability, sustainability, and cash generation in the near to medium term. I thank you all for your time, and I am happy to answer any questions that you may have. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Divya Daga from Global Securities Private Limited. Please go ahead.
Congratulations for good set of numbers and for margin improvement. I have a couple of questions. My first question is, as more than 50% of the revenue of company comes from paint and coating segment, and the upcoming plans of Grasim and JSW will be helpful for us. So can you provide that if we are in talk or do we have any contracts with them?
Yeah, so with Grasim and JSW, we are already an approved vendor and we are already doing consistent supplies to the company. In terms of Grasim, we have already initiated the trial orders as an approved vendor for them, and with the announcement of their different plants across the country, as they open up, we will be starting to supply to them as well.
Okay. My next question is, in H1 FY23, revenue was 374 crores. When in this H1, we have a revenue of 391 crores. That is 4% growth, 4.5 something. So you have given a guidance of 15 to 18% revenue growth for the year. Will we be able to cover this by the next 6 months?
Yes, we will be able to do that. And yeah, we shall.
Okay, sir. My last question is, there is fall in other expenses from 54 crores to 48 crores in Q2 and from 105 crore to 94 crores in H1. So is there any major fall in particular head? Can you state?
Yeah, there are two heads I would like to define here. One is the power and fuel cost, where the fuel cost has gone down, where we are using furnace oil to manufacture our kaolin in Bhuj plant. So that has decreased since it's an external thing we are dependent on. So because of that, we have a reduction in the fuel cost. And secondly, our export logistic cost has gone down substantially. So if you look at the COVID times, the freights had drastically increased to normal levels, and now they have got back to the normal levels. And because of that, earlier times we used to have very high export logistic cost, and we have now this financial year we have a substantial reduction as well. So these are the two factors.
Okay, sir. Thank you so much.
Thank you. Next question comes from Darshit Shah from Nirvana Capital. Please go ahead.
Hi, Adilji. Congratulations on a good set of numbers. Yeah, I basically wanted to know a little bit about the JV that we intend to we did with the German company for manufacturing construction chemicals and building products. So, any color on what kind of capex that we intend to do for this, and whether it's going to be for a completely new plant or in our existing plant we can make those products?
So this, it's too early for us to comment anything on this JV because we are still in the negotiation phase and preparing of the terms and conditions for the JV agreement. So we are still working on the conditions and the kind of investments that would go into the formation of this JV and the manufacturing that we will be doing. So in maybe another 6 to 8 weeks, we will have a clarity on the same, and we will be announcing the same in the exchanges.
Got it, sir. No worries. So this company, I think, is a very old, kind of 100-plus year old organization, mostly into construction chemicals and building products. And probably the revenues are in millions of euros. So, so just to get an understanding on, if you can give a little bit idea, what kind of products do we intend to make, or probably are these going to be the first of its kind products to be made in India, or probably is there an export opportunity too, if you want to name the product, just to get a rough idea, what are we looking in this JV?
Basically, if you look at today's scenario, many of these European companies are willing to enter into India. So this company has been in business for many years, as you mentioned, and it's a very old known company in Germany. So they decided, since we had a relationship with this company before, we were in discussions of manufacturing certain construction chemicals here in India. So it's a mix of different chemicals that we will be doing. We are still working on the final aspect of the products that we will be manufacturing here in India. But most of them will be the new age technology products, which I think some of them are doing, some of them are not doing here in India. So once we have a list ready of the different products that we intend to make here, we will definitely be announcing that as well.
Sure, so that would be really helpful. So secondly, on the margins front, as you alluded that there was reduction in power and fuel and the freight costs, a little bit increase in the gross margin, which has led to this 15% kind of operating margins from around 12.5-13% that we did last year. So any rough ballpark guidance on the margin trajectory probably for this year and for the next couple of years? Where do we see them heading?
I think this is an optimal figure that we usually work in our organization and in the ecosystem that we work in terms of the industrial mineral segment. So 15% is an ideal margin space we usually look into. So to maintain these kind of margins will be the task that we will be taking up in the next few quarters and to sustain them, and then we will be working on improving them as well.
Sure. And then lastly, on the, when we met, I think you alluded some product that was kind of used in the EV battery space. Can you share a little bit more highlight on what that product is and whether are there any potential kind of client tie-ups or something of that sort that we can do in India or exports?
So right now we are working on that product. So we have not yet completely finished working on the product. So once we have some clarity on that, we will be targeting more of the export markets and the Indian market. But the Indian markets currently is still in the very nascent stage of the EV and the semiconductors and the battery space. So a lot of projects are being announced. Once we have some clarity from the production happening in India, we will be trying and designing the product based on that.
Great, sir. Thank you. I will join back in the queue if I have some more questions.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Mayur Liman from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. Am I audible, sir?
Yeah.
Hello. Yes. Sir, my first question is, what are the reason for the revenue increase apart from the festive season?
The increase in the revenue?
Yes, sir.
Yeah, the demand has been very good, I think, in the term. So we were, usually the demand is usually there till the pre-Diwali season. So we have seen a good growth in the demand from various different sectors in the export markets as well as the domestic markets pick up. And so that is the reason that we have been able to increase the revenue in the quarter 2.
Okay. My second question is, what are your expectations from the next quarter, sir?
So quarter 3 and quarter 4 usually are at par with the current trends that we are following. So there might be the demands are quite erratic in terms of this financial year, but we try and maintain our revenue growth and our bottom line growth, keeping in consideration the various different market segments that we are a part of. So we try and balance our portfolios accordingly in terms of the product range that we have to offer in the markets within the domestic and the export market. So I think it should look fair enough in the same way that we have seen Q1 and Q2 shape up.
Yes, sir. Sir, my last question is, could you please give the revenue breakup of the product wise, and do you have any plan for the adding new product in the future?
Yeah, so we keep continuously innovating and adding more products in our portfolios. Our 20 microns product revenue mix typically is in the range of 50% for calcium carbonate, about 22% of kaolin, about 10% of talc, and remaining is all other minerals like quartz, mica, feldspar, and other products. And in 20 microns nano, we are doing various kinds of opacifiers, wax additives, processing aids, matting agents, rheology modifiers. So, as mentioned, they contribute about 12% of the total revenue of 20 microns. So that's how our product mix is basically bifurcated. Typically, our product mix usually does not change much. It remains in the same percentage year on year, with an increase in the growth levels that you usually see.
Okay. Thank you so much, sir. That's all from my side.
Sure. Thank you.
Thank you. Next question comes from Divyansh Gupta from Latin Advisors. Please go ahead.
Yeah, hi. I have about 5-6 questions, so I'll take one by one. Given that plastics is the second highest contributor to our revenues, and given this whole ESG and recyclable trend that is going, do you see any headwinds in the sector demand for 20 Micron?
No, that directly doesn't impact us in a way. So, but so we don't see like a significant increase in the demand happening for us.
So, what kind of, let's say, plastics are being what's the end user client nature with respect to the plastic segment?
So basically, we are into PVC cables, we are into master batch producers, so and into polypropylene, polyethylene, and PVC is a major plastic segment that we cater to. Yeah.
Understood. Coming to the second question, what are, let's say, pricing policy or dynamics with the customers? Is it contractual for 6 months, or is it market plus kind of thing? And what is the reset frequency, if any?
So there is no specific contracts that we usually do with most of our end customers. Yes, for export customers, we are bound with certain contracts for an yearly base or 6-month base, but not for all. It depends on which distributor or which customer we are engaged with. In the domestic market, usually it is more on the typical cycle of the revenues that the quantities that we are usually doing with them. So we just try and meet those demands which keep coming. The demands are not consistent. The demands keep changing. So that is the reason that we have to continuously work with our customers on a regular basis, on a monthly basis, to understand the demands that they might have, depending on their end demand that they would be having. So that is the reason that in the past, I think 1.5 years, we have been working very closely with the customers due to these erratic demands that keep coming. So there's no fixed contractual system that we have in terms of that. In terms of pricing, we work on some major heads. If they keep changing, then definitely we work with our pricing strategies based on that. But it differs again from application to application. It differs from the product group to product group. So it doesn't form one whole systematic approach that we do for the company.
Got it. Understood. And coming to the paint sector, or let's say general customers for you, what is how much of in their P&L, how much is your cost? As in, if a paint is 100 rupees, then 20 micron product is 5 rupees, 5 paisa, or what's the kind of overall average with respect to the
in
pricing?
terms of volume, if you consider, it is anywhere in the range of 20% to 40%, depending on what kind of a paint they are manufacturing. Every paint has a different formulation, so depending on what paint we are manufacturing, a low grade paint being a distemper to a high end premium emulsion paint that they are making, to any other powder coating, to an industrial paint that they are making, the formulations are very different. So it is not easy for us to tell you. So every customer, every formulation is very, very different. So there's no fixed base price or a base volume that would go into a certain formulation. They also keep changing the formulations based upon the market demand. So
okay.
that is how it works. Yeah.
And I'm assuming the premium paints will have a higher share of Micron. Micron will have a higher share in them.
Well, again, if you make a premium paint, the volume which goes into making the premium paint is lower because they use more finer materials. But the price of that particular product will be much higher. So that's how it works.
Got it. Yeah. And what would be any idea on the market share that we have with respect to paint sector?
So again, it differs. It's very different because we only do a certain segment of products. When we deal with the paint industry, we don't do all the different products which are there because we don't have like a perfect market size that we can define in terms of where we stand, because for every customer we have a different ratio where against our competition where we stand. So
any ballpark number you can
ऐसा नहीं है मेरे पास, unfortunately. But we are trying to work on it to define an accessible market space. So based on that, if we have a number ready with us, we'll definitely share with you in the future calls. Yeah.
Thank you. Got it. So the next question is that I've been reading your annual report from FY15, and every year there is a long list of new products that have been developed and the company mentioned.
Right.
So let's say in the last 3 years, whatever new products that we have launched, what is their sales contribution in our overall sales?
So it will not be a very significant contribution. They will be anywhere in the range of between 5 to 6%, because most of these products which are developed, they would either be developed for one or two customers, or for a particular market segment, a smaller market segment, or a specific industry segment. So again, it will take time for these products to grow into the mainstream markets. So we first do these products with the customers who have demanded these products. Once they work for them, then we share it with the main markets to go forward with. So usually in the first few years, it is usually in the range of 5 to 6%, and then it kind of grows in the next 2 to 3 years to a bigger size.
And the bigger would be around?
That would go up to 10%.
Got it. Understood. And just last couple of questions. So are there any
I'm sorry to interrupt you, sir. So could you please join back the queue again,
sure.
sir, for more questions?
Sure.
Thank you, sir. Next question comes from Darshit Bora from Robo Capital. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Hi. So congratulations on the good results. I just wanted, not specifically a guidance, but just a view on, revenue going forward in the next 2 to 3 years, say by FY26. I mean, you've given some guidance on 15 to 18% for FY24. Has that changed? And also for the future?
So that will continue to remain the same. So our goal internally is that with the kind of markets that we are in terms of even the turbulent times where we have seen in the past, we continue to be steady at a 15 to 18% growth levels year on year, and that is what our internal goals are. Definitely with the addition of capacities in the future that we might have, once we put them into use, then we will have a clear picture on where we will, further our growth compared to the traditional 15 to 18%. But we expect that at least for the next 2 years, 15 to 18% growth levels is the ideal one for us.
All right. Thank you so much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Sanjeev Damani from SDK Consulting. Please go ahead.
Am I audible?
Yes.
Yes, sir.
Hello. Thank you. Namaskar, Atul bhai. I'm the same person who visited you in the last AGM, and congratulations for excellent numbers. And we know that you are very much investor friendly and very transparent with all the investors. So thank you very much for being so good. Sir, we wish your company to be market leader and main supplier to all the paint industry. Now, I would like to understand only one thing, that who are our nearest competitor as far as raw materials meant for paint industries are concerned. That is my first question, sir.
So again, when you look at competition, no, there are no listed players. There are no listed players in the competition. We have few international players, and again, when we look at competition, they will be different for each product group. So for calcium carbonate, we'll have a different competition base. For toluene, we'll have a different competition base. For talc, we will have a different one. So we'll not have a general competitor across the board like 20 microns product range that we are offering. So again, each segment will be represented differently. So we have many competitors in calcium carbonate. We have few competitors in talc and kaolin. So it differs. So this is not the right case for me to name them, but I think we can take it on a different level when required.
Okay, sir. now, emerging from the discussion that took place in this meeting only, I just want to understand that we have a share in all kinds of paints being manufactured in India. I mean, can you kindly confirm that we have some material to supply for all kinds of paints, whether it is plastic or whether it is oil-based?
Yes, we do supply to marine paints, we supply to automotive coating, we supply to powder coatings, we supply to industrial paints, we supply to decorative paints. So all paint segments are a part of our core group.
Okay. Thank you very much, sir, and all the best for coming times.
Thank you.
Thank you. Next question comes from Utkarsh Patel from Motilal Oswal. Please go ahead.
Hello, can you hear me?
Yes.
Yeah. So I just wanted a broad view about your vision for the company, right? Let's say today we are at a particular size, right? So as a company, how do you see this company evolving over a period of next 3 to 5 years?
In what terms are you looking at?
I'm talking in terms of revenue, profits. Do we have any internal targets for next 5 years? Let's say we want to reach here in 2027 or 28.
Yeah, so we have our own targets. So as I mentioned to you that we have a target of 15 to 18% year-on-year growth. Now we are working on the company has started to evaluate potential projects for expansion internally in India and abroad. We are also exploring the potential to add more mines into our additional reserve. We are also looking at potential strategic initiatives and opportunities through various JVs, collaborations for the growth factor. So there are some high investment projects which we are supposed to be looking at now, but with the turbulent conditions in the markets globally, we are taking a cautious approach with that, with the changing market dynamics. And so we are keeping working on this major outlook, and so we'll have some clarity of thought regarding our potential capex plan, which will be put into use and which will be contributing to the total revenue growth for the coming 5 years. So that is currently being worked upon right now. So we are just currently going ahead with our regular capex plans, but with the recent JD which we're forming and various other projects which are in the pipeline, discussions are currently ongoing with various different people across in India and globally. So as and when these things start shaping up and the disclosures can be made, we will be announcing these things in the coming months.
Okay. Just to follow on to that, let's say in terms of our existing infrastructure, what level of capacity utilization will we be working at?
So currently we are our own manufacturing. We are operating at around 85% of our capacities, but we have a model of our own manufacturing, toll manufacturing, and contract manufacturing. So these three models, if we look at it, then we have enough room available for future growth, because what we do is that the regular mill of the run-of-the-mill products which are there, we do it in toll and contract manufacturing, and all the more advanced technology products and more final products which are there we do more of our in-house manufacturing. So that distribution keeps happening every quarter. So that's how we keep on growing, and with minimal capex that we intend to do.
Okay. And your own manufacturing would be the major piece, right? Toll manufacturing and contract manufacturing would be a smaller part, right?
Yes, that's right.
Okay. Just wanted to understand one more thing. Let's say last year we had H2, which was slower compared to H1, right? So we were at 180-190 crore in the H1, but H2 was significantly slower. I think 10-15% slower than H1 last year. So do we see any particular trend like that this year as well? And if there is any seasonality aspect to the business, maybe if you can clarify on that.
Post-COVID, we have lost the seasonality aspect, so we don't fall under that category anymore. It's kind of even cycle across the year. But yes, as I mentioned before in one of the questions, that the market dynamics keep changing. So earlier we used to have a clarity on a 6 month vision as to, how the market is going to behave. But now that 6-month horizon has come down to 2 months, 3 months, so the market keeps changing every 2 months. So it is hard to predict, but yes, we have our internal statistical department which kind of maps it in a way that we kind of balance our portfolios and try to maintain the H1 in the H1 as well. So we try to remain stable and try to grow if possible in H2 as well.
Understood. Just one final question. We have a debt of closer to 100 crore as of now, right? Do we have any plans to repay it, or do we see this going up in the future?
When you look at the debt, total debt components, there are multiple components as a part of that. So if you look at our long-term debt, it is just in the range of 8 to 10 crores. So that we will be repaying within the next few months. And apart from that, we have our fixed deposit, which is also part of the overall debt, if you look at it. And we have the only discounting that we do with many of the big customers. That is also a significant component as a part of that whole debt cycle. So they will continue to remain in the way it is. But yes, the long-term debt we will be getting, mostly in the next couple of months or in the next few quarters.
Okay, because I was looking at your interest expense. You have an annual interest expense of closer to 17 to 18 crores versus your debt, which is closer to 107, 108. So I'm assuming interest cost you are incorporating the discounting charges, etc. as well. That's why this number is high, right?
Exactly. Yes, that's right. Yes.
Okay. All right. That's it from me, sir. Thank you.
Thank you. Next question comes from Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what is the contribution of the export revenue in our business?
So we usually are in the range of 15 to 16% of our overall revenue is export business.
So are we looking to eye more on the export side?
So the mix would continue to remain the same. The more we grow in the domestic market, the same way we are going to the export market as well. So the export potential keeps changing with the changing dynamics again. So our main focus in the future, especially in the next 1.5 years, is going to be more of Asia, like Middle East, Southeast Asia, the Indian subcontinent. So that is going to be our main focus, because Europe and America, we are not seeing a significant growth happening in terms of the economy. And South America for sure. So these are the areas we are more focused on.
And so what is the overall market size of the product that we are dealing in?
As I mentioned in the previous question, we don't have a defined market size that we work on, because every product, every industry we serve in works very differently. So we only do a certain segment of products and not all the products out of that whole market size. So it's difficult to take a judgment that way.
Okay. So when we do a business with any of our clients, so we consider as a margins as a percentage, or do we calculate on a EBITDA per ton basis?
Pardon, I didn't get your question.
So our margins, sir, we consider as on a percentage basis, or is it on a EBITDA per ton basis?
No. It again depends how we work on the margins. Again, for every product group that we work in, based on the market demand and market scenario, our margins get worked upon. So it's we don't have a fixed way of working on the margins. Our pricing kind of gets defined by the market conditions.
Okay. Got your point, sir. Thank you so much.
Thank you. Next question comes from Janisha, an individual investor. Please go ahead.
Yeah, hi, sir. Congratulations on a good set of numbers and showing consistent growth over last few years. Just have a few questions, basically with regard to the margins and the way you are steering the company in next few years. Just to take you a little back, I think 2019 the company was making EBITDA margin somewhere close to like 14.5%, and subsequent to that, there's been a decline, and now it is going back again to that 14-15%. Is it been attributed only to this cost improvement? I mean, saying the reduction in the cost, or how sustainable the margins at 14-15% look like? You mentioned about that it's a usual business, but just wanted to get some more color around that. And second question is with regard to the efforts which you have been making to accelerate the growth with adding new products and also the cost savings measures which you have taken. How do we see the margin trajectory moving in next 3 years or so with regard to the company? And lastly, when we look at the return ratio, it's been improving, especially the return on capital and return on equity. Where do we see this business has a potential to stabilize in terms of the return ratios on a 3 to 4 years basis? Thank you, sir.
So now when we look at the margin specifically, the margins usually get driven by the product mix in our scenario. So since we have a larger product group, the contribution of, so again, depending on the market scenario, if there's a higher demand for the lower value products compared to the higher value products, then definitely the margins kind of get beaten up. But if there's a stable demand coming in from all different segments of all different industries in an equal contribution, then definitely the margins remain in the current group that we are seeing in the range of 14 to 15%. And if you look at a global industry average, 14 to 15% is a very stable margin which the global companies in this segment, in this industrial mineral space, which they operate in from many, many years now, they usually are within this margin bracket. In our case, definitely we are on the growth trajectory, and we want to incorporate more and more value-added products, and that is what our internal goal is, that we try to create more cutting-edge technology products which kind of benefit the customers in their formulations. So that is where the margins would come into picture. Now, in terms of Nano, which is one of our subsidiaries, we are working on specialty chemicals and functional additives. Now, we are working there since many years now to develop many new products for the same kind of industries that we are part of. And now here we see that there is a significant improvement in the margins, which is possible, but that would only happen when we reach a certain turnover in that particular group, because we are currently operating with older machinery. The yield which is there is not as per the required ratios, and so because of that, we are kind of struggling with some of the raw materials that we are also needing. So we are kind of exercising our way through stabilizing the Nano operations. Once that gets stabilized in a better way, the overall company margins will also kind of improve. Similarly, we are also expecting a growth in the export markets as well, where we see a more higher margin contribution. So once that will also kind of help us in terms of reaching a certain goal that we have, definitely the overall margin landscape would also improve.
And just another question with regard to your raw material sourcing. I think you had have a trouble and a challenging period during the last 2 years when the entire logistic globally went haywire. How are we now relooking at the sourcing strategy for the raw material to ensure that the growth doesn't get suffered for the lack of the material?
Yeah, we are in a much better time right now. With we don't see much of erratic movement happening in terms of the logistics and in terms of the imports that we do. Our procurement department is continuously on the move in terms of getting us the right products at the right time. So I think we are in a much better place than we were 2 years back. And looking further, we have a great procurement team globally, and we are exploring resources across different parts of the world. And we have access to various different products and raw materials available from various different territories. And so I think we should not be much afraid of the future, because I think we know our raw materials and where to source them from. So I think that's I think we're clear about it.
And maybe the last question is, you mentioned about the capex, which is going to happen in the years to come. Could we just get some understanding on the quantity, as like what kind of amount which we are going to invest in various projects over next 2 years or 3 years time?
So we are still working on the same. We have not finalized the plan, because if we had a plan in place, we would have shared with the investors. So because of the changing market dynamics, as I mentioned to you, we are continuously reworking these projects from our side to see if we need that at this point of time, or should we postpone it to the next year. So that is the reason that we are continuously evaluating and putting it across our board. And our board is also actively considering various growth opportunities in both the parent and subsidiary companies. So once we have more clarity on this, we will share with you more detailed updates in due course of time.
But if you can just share some ballpark number, that will be helpful.
We don't have a number. So right now, for the next 6 months to 1 year, we will be just doing the traditional capex of 10 to 15 crores that we usually do in terms of, upgrading our machineries and bringing in more machinery. So that is something that we would be doing. But the significant amount of capex plan, which is there, is something that we are still reworking on. So we'll share with you more updates in due course of time.
Thank you. And just to confirm, you said for 15 to 18% growth. That can, for next few years, at least for next 2-3 years, can it happen on the current? Or you require an investments in the capacities or the existing?
We would, but not with a significant capex. We can manage that with minimal capex plans in terms of adding basic capex that we do year on year with addition of few machineries that can be achieved.
Okay. Thank you. Thank you very much.
Thank you. Next question comes from Deepak Budal from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Yeah. Thank you very much, sir, for the opportunity. So first up, I just wanted to understand on your value added. I mean, in the press release as well, you mentioned about this value added product along with this construction chemicals and mineral fertilizers have garnered significant interest. So just wanted to understand what is the share of this product right now in terms of revenue mix, and how do we see that going forward? And what's the margin differential, I mean, on your normal product and value added product?
So right now, the mineral fertilizers and construction chemicals don't contribute a very significant amount of revenue to the overall top line. We are still in the growing phase. So in 20 Micron construction chemicals, what we do is we have a range of different waterproofing products which are based on the mineral technology, which is something relatively new which no one else was doing in Indian markets. So that was something that was out of the box, and we decided to venture into that. And we see we are taking it quite slowly. We are not, spending too much money in terms of the branding and advertising. So what we are doing is slowly and steadily working on the tier 3, tier 4 markets, and we are trying to build a distribution network in some of the states, and then taking it slowly and steadily into pan India. So in the next 5 years, we see this growing, at least 5 times of what we are today. So that is what we are expecting in both the segments of mineral fertilizers and 20 Micron's construction chemicals. Mineral fertilizers, we are basically into manufacturing of mineral-based fertilizers, where we use most of our own minerals with some external components, which are natural ingredients, and we try and make the mineral fertilizers which are substitutes for the organic fertilizers, and basically used for organic farming. So our going target is to create a distribution network in the rural parts of the countries, in the more of the farmer segments, and urban landscapes as well. And we try and we have to go through a certain licensing process through the government. And so these things take time, and so we are taking it slow and steadily. And so these definitely will see a significant growth in the next 5 years.
Currently it is what, 1-2%? I mean 1-2% of revenue currently. I mean 5x.
Yes, exactly.
What's the current reference point? I mean 5x I understand, but without a reference point will not understand, right?
Yeah, so we currently will be at 10 crore revenue right now. So it will grow to 50 crores maybe in the next 5 years. So that is
10 crores revenue. I mean out of FY23 you're talking about, out of 700 crores.
Yes.
In FY23. So that we expect to be 50 crores in next maybe 5 years.
Yeah.
Okay. Okay, understood. And my second question revolves around your margins. I mean, you mentioned in your press release as well that you maintain current margins that we are doing, EBITDA margin for FY22 to remain in a similar range as the existing, with a likely improvement of 50 to 100 basis points. So I just wanted to understand the reference. So we are just talking about the reference point. I'm just trying to understand what's the reference point here we are talking about.
15% is the reference point, as I mentioned to you. It's a global average.
Mm-hmm.
So 15% is the reference point we need.
So with a likely improvement of 50 to 100 basis point, I mean, in the next 1 to 2 years, you expect 50 to 100 basis point improvement over this 15%?
Yes.
Okay. Fair enough. That's very clear, sir. I think, that's it from my side. All the very best. Thank you.
Thank you. Next question comes from Itin Borija from Joindre Capital. Please go ahead. I repeat, question comes from Itin Borija from Joindre Capital. Please go ahead.
Hello. Am I audible now? Hello?
Yes, sir. Please go ahead.
Yeah. Thank you for the opportunity, sir. So I've been looking this company for the first time, so maybe my questions may be a little basic. So the first question is on the raw materials. So what kind of raw materials do we have currently, which is the major parts of our raw material? And can you give the price trend of that materials? Where are we sourcing from that, etc.?
Well, I think I'll need to give you a brief background then about this, because raw materials, basically, you need to source it from the mines. So each product that we make, the raw material usually is in the form of the ore, and then we grind that to manufacture our products. So basically, we use a lot of domestic raw materials, and we use many imported raw materials also for the same.
So can you name some of them? What are the major raw materials?
So all the raw materials would be the same as the product group that we have, like calcium carbonate, talc, mica, quartz, silica. So these are the same raw materials, are the same product groups. So there's no distinction in that.
So we buy this from the third party. We don't own any mine or anything.
We do have 5 mines, as mentioned in the opening remarks. We do have 5 mines in different parts of the country. So we operate our own mines, and we also procure from outside, and we also procure from international resources also, because some products that you manufacture, you will need to have the access to various different resources from where you can manufacture these products.
Okay. And so you mentioned we have been running at 80-85% capacity utilization. So what's the exact capacity we have currently?
85%.
No. The capacity in terms of
450,000 metric tons.
450,000 metric tons. Okay. So I have couple of more questions, but I believe that will be more basic. If you could, just a request from my side, sir, if you can upload the detailed presentation or anything like that for investors, it would be very good for us.
You can get in touch with our investor relations people. They have all the presentations available with them, and if you need more information, they will be able to explain the company better to you in a concise way.
Okay. Thank you, sir.
Thank you.
Thank you. Next question comes from Ayush Agarwal from Mittal Analytics. Please go ahead.
Hello.
Yeah, hi.
Good afternoon, sir. Congratulations on a good set of numbers. Sir, my first question is on the standalone business. So what kind of capacity utilization do we have there, and what kind of capex plan do we have?
I think I mentioned to you that we are working at 85% capacities for the standalone in 20 microns itself. And since we are working on a mix of own manufacturing, toll manufacturing, and contract manufacturing, we have sufficient capacities available with us as of now to, at least for the next few quarters, that we can be able to manage the growth that we are anticipating. And in that time, we are also in the plans of minimal investment growth plans are there in terms of the capex, which we will be incorporating in for some of the additional machineries that we will be putting it into use.
So, sir, given that, we will exhaust all of these capacities in the next maybe 1 year, should we not be thinking about a capex plan to expand capacities?
Yeah, so as I mentioned, we are working on the capex plans, and because of the changing market dynamics, we don't have a fixed capex plan as of now, because every product group that we are a part of will require some sort of a capex plan to be designed. But we are continuously reworking on that, and once we have a final plan ready with us, we will be sharing more updates with all of you. But as of now, we don't see any bottleneck happening, at least for the next 1.5 years in terms of the capacities.
Understood. Sir, any plans to, increase the share of kaolin business? As I understand, the margins are much better there.
Yeah, so again, it's a part of the capex plan, and that is something that we are working on currently, which is a priority. And so again, since as mentioned before, kaolin is quite a high capital investment project, and we need to keep the future market scenario into consideration. So looking at that aspect, we will be, working on a capex plan, which is more feasible, and we will be sharing updates with you in some time.
Understood. And so similar, plans about 20 microns nano, what is the utilization there and any capex plans there?
No, we do not require any capex there because we are just working right now. We have sufficient capacities in 20 microns nano. Our main focus is to increase the product range there and the market penetration there. So that is what the goal is going to be in nano for the next 2 years. Once we reach a certain market penetration and a top line, then we will be putting more efforts into more of investments in nano. But as of now, we have sufficient capacities there.
Understood. And sir, my question is on our interest cost. It is on a declining trend, but it is still very high. If I just divide the interest cost by debt on our books, it is upward of 15%. While, debt costs are not so high in India. Any reasons why our interest costs are so high, and when can we expect it to go back to 8, 9, 10%?
So I think it was addressed in one of the earlier questions also that the debt component includes, our long-term debt, our short-term debt, and our fixed deposits, and our Hundi discounting. So the Hundi discounting portion, which is there, has a much higher debt higher interest rate compared to the regular debt interest rate that we have, and that is the reason that it is showing on a much higher side. So
why do we need that, sir?
That is because we have to service our major customers, the bigger customers who have a significant amount of share. So for that, we do the which has been a typical practice of ours for many years now. And so that is one of the reasons that it is showing on a higher side. Otherwise, our regular debt, which is there, long and short-term debts, that definitely is quite low and is still expected to go much further down with our improved ratings and our improved financial performance.
Understood. Sir, thank you. That's it from me, sir.
Thank you. The last question for the day comes from Srinjana Mittal from Ratnatraya Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Hello. Yeah. So I'm Shubh. I'm speaking on behalf of Srinjana. I have basically 3 questions. So first of all, you mentioned that we also import some of the raw materials. So what are these raw materials? And second, we are utilizing our mines at 85% capacity. Then why do we need to import?
Yeah. So to address your question, we are importing all different kinds of raw materials from various different countries. We are also utilizing a lot of domestic resources within India, and we are also utilizing some of the resources from our own mines. Now, to make certain products which is demanded by the end user industries and our end customers, the Indian raw material does not suffice those requirements, and so it is a requirement by the customers that it has, you have to use a certain kind of raw material to make those products. And to get those raw materials, we need to import them from different parts of the world. So we have access to raw materials from different areas. We have our own subsidiaries in Malaysia and in Vietnam, where we procure a lot of calcium carbonate from there and we bring it into India. We have toll manufacturing there as well. We also process those materials in India as well. So that is one of the reasons that whenever the Indian raw materials does not suffice the requirements of the markets, you will need imported raw materials.
Understood. And is there a percentage split in terms of the costs of these raw materials, import versus domestic?
So basically, we have about 40% of our raw materials is imported and 60% is domestic.
Understood. All right. Second, can you throw some light on the product-wise margins?
Product-wise margins, I will ask my IR team to send it across to you.
All right. And the last question is, our leases, which are basically leased from the government, where do they show in accounting?
Pardon? I didn't get your question.
So basically, we have leased 5 mines, and
yeah.
So where do the lease or the rent payments show in accounting?
So I've shared with you in the opening remarks the entire reserves that we have for the different mines that we have leased.
Sorry, no, I'm not asking about the reserves. So the rent payment or the lease payments.
There is no rent payment or lease payment for these mines. Basically, how it operates is that you need to pay a royalty on each metric ton that you mine out of the entire mine. So that is basically one of the heads of royalty paid that you would have, which is the part of the entire. So there's no lease rent or any rent that you pay to the mine for the mine.
Understood. All right, that will be all from my end.
Thank you. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a good day.